Hey guys, in this video we'll be talking about financial strategy. I know, super exciting, but it's a really good thing to know and to deal with, especially as you're running your own business. If you are a saver or a spender, this might affect how you look at finances. If you're a saver, it'll become a little more natural to you. If you're a spender, there's some pitfalls that I have seen before. A lot of times in a business, your cash flows and your business bank account kind of goes up and down like a roller coaster. It goes up a lot one month, you have a lot of business. Next month, it might go down a bit and you don't have as much. And when some people see a very large bank account, a big balance, they go, "Ooh, I can buy all this stuff now," and they just start buying stuff that normally they wouldn't. So that's just one thing you just have to monitor. If you are a spender, I would say maybe have someone, I don't know, be like an accountability buddy to you, or some way where you're just not spending money all willy-nilly, because that way you can get yourself in a lot of trouble. I would just say have some type of plan and just have a general guideline of how much you're going to spend and what you're going to do with it. So that's just some basic financial strategies. One of the biggest benefits to having your own business is to be able to expense things that normally you wouldn't be able to. So the nice thing is when you expense things, you get your money from your clients. So you get up $2,000 and you need to buy just some sort of equipment, a bunch of supplies for your business. You say there's $500 worth, you buy $500 worth of supplies, and that was tax free. You did not lose any money. So if you pay yourself the remaining $1,500, you'll get taxed on that. So the biggest advantage to owning your own business is to expense as much as you legally can that you would normally need. So for instance, you can do cell phones if you use your cell phone a lot. You can do lunches out sometimes, especially if you're taking a client out. You can do normal, you can sometimes do mileage. You can do all kinds of things related to your business. There's some gray areas, so you don't want to go crazy and buy a jet ski and expensive because you need it for your business. So you don't want to go nuts in that regard. But for instance, if you have you're in the market to buy a new computer and you use it mostly for your business, you can expense that. I would suggest talking to your accountant first, and we'll go over in another video how to find a good accountant. But in most cases, you can expense a computer, say it's $1,000. You can buy that computer tax-free from your business account, which is awesome. Because in business, every time you take payroll, you're getting taxed. So the less payroll you can take, the less money you'll pay in taxes, which is kind of a strategy. It's kind of different from if you're working as an employee. You want to get paid more and more. In a business, you want to keep more and more legally, and the way businesses are set up, they make it so you can do that. But just a quick example would be, say if you wanted to buy a computer for $1,000, you were going to buy one anyway. Your computer's very old. So you say, all right, I'm in the market for $1,000. It's going to be tax-free. So pretty much you buy $1,000 computers tax-free. But what you have to watch out for is if you go to the store, say you go to Best Buy, like, oh, I like this $1,500 computer. You weren't going to buy it, but you look in your business account, you have that money. Well, now you're spending a bit more than you normally would, and your tax savings aren't there because you're only saving a third in taxes. So just the math doesn't work out. So just make sure you don't overspend, because that is a place where a lot of people get in trouble. And one thing I also want to bring up, if you're buying a lot, like a very large purchase, like a big piece of equipment that costs $100,000, there's a different method. It's called depreciation. And I don't do this very often, so I would definitely recommend talking to an accountant. What you want to just make sure is if you're making very, very large purchases for your business or financing things, just make sure you're doing it correctly. A lot of times if you want to get like a truck or something for your business, a very large, who knows what, just make sure that the big purchases are the ones you really want to manage carefully, and just make sure you do it right. And it's worth a phone call to your accountant just to make sure everything's going well. Another thing are credit cards. And if you have your business credit cards, you're getting rewards. That's something that you can use to your advantage by just using rewards to help you out. And either you can use it for fun if you want to, or you can use it just to pay down your normal credit card balances. Another thing to look at is you really want to focus on growing your revenues instead of growing your expenses. So just really put all your effort and energy into growing your revenues. You'd rather see your bank account go up and up and up every month, and then worry about how to spend it or how to do tax management at the end, because if you're paying money in taxes, that's a good thing because you are making money, you are being profitable. It's a lot easier to deal with more money than less money. So just really focus on growing revenue, especially in the early years. And the nice thing is you can prepare for, okay, I'm going to have a big expense coming up. I have been building up my cash flows and not spending it on stuff that I necessarily don't need or use. So just make sure you're being frugal when you need to be frugal, and then once you have your millions of dollars in the bank, then you can have some more fun. Another financial tip: if you are going to go through a bank through traditional financing, say for a home or a rental property or some type of large purchase, sometimes buying a car, what the banks really like to see is your W-2 income. And if you are a business, they're going to see a couple years of tax returns. So sometimes with a business or a new business, if that's your only source of income, and you want to buy a house or buy a car, you might need to get a cosigner for it like early on, even if you have good credit. But if you've been in business for 2 or 3 years and you're showing steady growth and you have revenues, but your income might be a little lower because you're using you're buying a lot of things and expensing a lot of things, just because it's more of a smart financial strategy. They might need a cosigner, but just show them the growth of your business, and usually they're fine with it. But that's just one caveat I will tell you. If you decide not to pay yourself that much money, is that the banks typically don't like that, just because for some reason they like to put everyone in a box of you get W-2 income like a normal employer. And that's just what I've encountered with banks before, but there's always ways to work around it. There's business-friendly banks. Just want to let you know that's a possibility when dealing with banks. So I've given a broad scope of financial strategy. Now I'll go over some things that I do personally for our business. So for me, I do the books. I do a lot of the banking because I'm more of a saver. Jeremy's a spender. If he would see our bank account when it goes up, we might have some ridiculous stuff, but our payroll might be a little inconsistent. So what I like to do is pay us a very consistent amount all year. January through December, we're getting the same exact payroll, no matter where our bank account's at, even if it goes way up. And I found a good number that works for us over the years. And I just like to keep that consistent. It's very easy for your income on your personal level. And then when there's times where, at the end of the year and the quarter, we'll bonus ourselves out when we've done really well for a quarter. So I like doing that. For expenses, what I like to expense are things that I use personally and for business that kind of work together. So, for example, our cell phones, they're all run through our business. Our healthcare, our mileage we get for driving to and from jobs. And I've talked to our accountant for all of these things, and he says, yeah, they're all good to go. Sometimes we'll go out for lunch on a job. We don't do that much, but we'll do it a few times a year. Just normal things, business things that sometimes you can use personally too that's beneficial, like all the paint supplies we buy, I can use that to paint my personal house. So there's things like that just help. And like I said, I just really like to be consistent and really have more money in the bank. And if unexpected things come up, because they do, it's not going to be a big deal. And if you're spending all the money you've made from one month, say you make $10,000, you spend $10,000, and the next month you make $3,000, it's going to be a bigger deal if you get hit with a $2,000 XYZ expense that you didn't anticipate. So I like to be prepared, I like to be consistent, and I just like it so things are steady netty, and then I get some nice bonuses at the year's end. That's an overview of how we handle our finances and how you can handle yours. Just do what works best for you, but I'll also focus on growing revenue and having enough money in the bank to cover any unexpected expenses.